Hello and welcome back. We are going to take a look at a very well-known company, Ford, which is a known car company pretty much. And with all the trend that we have seen in the EVs, Tesla, Neo, and the likes, people are understandably very willing and curious about a company like Ford, and they are willing to add it to their portfolios. As you'll see here, in the last 1 month, the company has been doing less worse than they have been doing before that. Yet the price has increased dramatically from the past years. So if you take a look at 5 years ago, it used to be $4 at some point. I actually had the stock. I think I bought it around $8 or so, $7 to $8, probably around here, back in the previous crash. And I actually sold it as it was rising at about $16 or so. And yeah, pocketed some nice gain over there. But the thing is, it's very different to actually trade it at 17 than actually trade it at 8 or 7 when I bought. So we want to examine whether it's actually worthwhile to buy the stock now, because right now it's sitting at almost $18. And so we want to make sure that we're getting good value if we are to take the trade. And it used to be 25.87, the high. It was 32% down from what it was. But let's take a look at the actual metrics here. What is the company doing? In terms of a PE ratio, the company has increased it from what it used to be slightly. But you see here that at some point it was 747. So right now it's sitting at a much better value, a very good value actually. And the price to free cash flow ratio is sitting at 7 here, another great value. It's making tons of free cash flow compared to the price of the stock. Now, the revenue growth, however, has been negative in the last 5 years, and you'll see here how it actually varies a little bit. And the same thing with free cash flow growth. Another great thing. I mean, it may be the price to free cash flow ratio may be low, and this means that this is an undervalued stock in terms of its if the relationship. But the actual growth has been negative, so it has actually been doing worse in the last 5 years. The good thing, outstanding shares are actually down than what they used to be 5 years ago in 2017, so the company is not really diluting investors. That's good to see. And the price to sales ratio, as you would kind of expect with these values here, is also following the trend of being relatively cheap here. And the company is paying 1.1 in dividend yield, and their payout ratio is very low. And on that amount, 1.1, this is a very good dividend payout ratio. This is a company that when I bought has had a much higher yield, I remember that. And then they cut down on dividends, which actually proved to be a mistake. And this is why you should be getting companies that are actually have enough of a dividend payout ratio and are doing well so they can pay the dividend. Now, this turned out to be good for me because I actually made a lot of money with the company, but it was a mistake in the fact that I didn't foresee the dividend cut. The return on equity is pretty good here, but you would expect this is a car company, and you would expect the margins to be low, and they are low, about 13%. Typically, from a tech company, you can get 30%, 40%. So bear that in mind. This is actually even high for a car company. Now, in terms of stock news, are we having anything in terms of Ford? Not really. It's mostly about like the chairman buying the Ford stock. So there's a little bit of hype going on, but not much more. But in terms of the social trends, is what I mentioned earlier. Look at this. There has been a massive increase to the hundreds, really, and this is actually 1,000% more likes on Twitter. So that's very interesting here. It seems like the stock is trending. A prime target for actual trading, really. This is very interesting. But let's take a look at what we can do with this company in terms of its stock price. Like if we try to run a stock evaluation, our stock evaluation tool here, which is very useful, can we actually deduce what's the amount to pay for the company? This is a huge company, and it has some years where the revenue has been rather low revenue growth and very negative in 2020. So I'm gonna go pretty low here. I'm gonna go 3, 4, and 5. I have to be very conservative with a company like Ford here. Net income year-over-year growth again has been all over the place, and you will see that the net income margins are close to 2%, 4%, with the exception of 2021. And this means that we have to use a low value here as well. I'm gonna go 2, 4, and 6. The free cash flow margin, again, how much the company converts from net income. Now this is much higher, with the exception of 2020, which looks like it was the pandemic year pretty much, that everything went south for the company. But you will see here that we can potentially use something like maybe let's go 70, 80 and 90 here. I think that makes sense. And again, as typical, I want to be making 13% from my investment because I can pretty much make about 10% just by buying an S&P 500 ETF and just hold it for forever. So calculate here, and we're seeing that the current price of Ford being at $17 is actually not that bad, yet it's slightly, very, very slightly above our medium estimates here. Now, of course, you can understand that the low estimates are way lower here because the free cash flow margins are lower, the net income margins are lower. There's a big jump between 2 and 4 here, as you can understand. And this gives us a much lower projection here. I'd say that based on these two here, the low and medium ones, I would be willing to potentially get into the company maybe at about $13, $12 to $13 would probably make some sense. But it's definitely not a company to completely like ditch and forget about it. Looks like it could be an interesting investment here. Now, of course, we did take a few projections here that may not come true, but they are not like the most aggressive ones anyway. I mean, last year the company did have 7% of revenue growth, and this is not even our high estimate here. And the same thing with the net income margin. It's only the free cash flow margin that was better than the previous averages. So, you can make of it what you like, but I think that Ford is a potentially interesting purchase here, to tell you the truth. Again, if it falls a little bit, not at this current price, maybe $13 to $12, I think it would be the sweet spot for me. And it's likely. I mean, it could definitely happen. So this is what I think about Ford, and of course, when you get your hands on the tool, you will be able to do your own projections as many as you like, really. And this will happen probably in about 2 months or so. But for the meantime, we can actually use these videos to analyze companies, and hopefully that helped you a little bit. Just get an idea of what what the stock is worth, and maybe you can think about potentially adding it to your portfolio. I really hope you enjoyed this one, and if you did, please leave a like and subscribe. And in the meantime, take a watch at the video that I made earlier, and it's about 5 undervalued companies and stocks that I think would be an interesting buy right here. Thank you for watching. See you soon. Bye bye.